Australia is set to buy up to 5 British-designed submarines using US technology. The major banks pass on interest rate hikes to mortgage holders, but this time depositors benefit from higher rates, and local scientists create energy out of nothing. It's Friday, the 10th of March, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Energy out of nothing. Great concept.
It kind of feels like what we do every morning on this podcast.
Yes, that's very true. A lot of energy coming out of not much. No, that's not fair on us. We do a great job.
You know what, Sean? I'm going to leave this. We'll discuss this in more detail a little bit later on when we get to that story. Speaking of later on, you've got an interview coming up after the show with Lucas Finch, the head of wellbeing at Xero.
Yes, so we talk about how important it is to look after staff. Now, there's a big story about Xero in today's show, so Lucas, no doubt, will be very busy today, but it is all about thinking beyond just dollars and cents and job titles and that type of thing when you are managing staff.
All right, but the main story this morning, Sean, a very big day yesterday in federal politics. First up, Australia is expected to buy up to 5 US Virginia-class nuclear-powered submarines in the 2030s as part of a landmark defence agreement between Washington, Canberra and London. This is according to US officials yesterday.
Yes, while Prime Minister Anthony Albanese declined to comment on the likely announcement in San Diego next week, media reports say the AUKUS Pact will have multiple stages with at least one US submarine visiting Australian ports in coming years. That's expected to be about 2027, and of course that would be a nuclear submarine. In the late 2030s, a new class of submarine will be built using British designs and American technology. Australia is likely to purchase up to 5 of the subs. There's a few different versions of the story out there at the moment, certainly 3 with an option of 2 or 5 up front. The deal is expected to create an industry of more than 10,000 workers to build, operate, maintain and oversee the subs. We find out all the details probably Monday night, Australian time, a very, very big deal worth tens of billions of dollars over decades.
Imagine if that was your job to oversee the subs. You think you'd be underseeing them, wouldn't you? It's way too early in the show to come up with that rubbish.
It is.
Sean, of course, Anthony Albanese was in India yesterday with a delegation of business leaders.
Yes, the Prime Minister pledged to strengthen economic ties between Delhi and Canberra. He met with Indian Prime Minister Narendra Modi and he said he was looking forward to upgrading economic relations. India, with its 1.4 billion people, is a massive opportunity for Australia, from resources through to banking and finance, education services, improving our cricket team, all those sorts of things.
And back home, Sean, the federal government has struck a deal with the Greens to push through its $15 billion National Reconstruction Fund. And the payoff is that the money can't be used to support coal or gas.
That's right. The legislation passed the lower house yesterday. It's expected to provide finance for projects in technology, transport and renewables to boost manufacturing in Australia. But as you said, Michael, no fossil fuels. The Green Amendments also bans logging of native forests, or at least using the money to do that. There was also plenty of debate in Parliament yesterday about the government's proposed safeguard mechanism. That's the one which forces the nation's 215 largest emitters to cap emissions, and companies breaching their limits could buy carbon offsets or trade emissions. The coalition is labelling it a Trojan horse for a carbon tax. Plenty more on that one. A very, very big day in politics yesterday, Michael.
Yeah, it sure was. And just on the topic of that, the safeguard mechanism, it's well worth going back and having a listen to Liam Connolly, our guest from Bain on Tuesday morning, who just explained all of that in such great detail that it is well worth a listen. Sean, how did local markets perform yesterday?
Well, it's hard to do well when some of the biggest companies on the bourse are trading ex-dividend. Now, remember, that's the cut-off day for receiving the dividends announced during the earnings season. So if you bought shares in BHP, CSL or Rio Tinto yesterday, you won't be getting the upcoming dividend. If you bought them earlier in the week, you will. With that as background, the S&P ASX 200 actually did pretty well. In fact, it ended about 3 points higher to 7,311 points. The 3 ex-div stocks all ended lower. So BHP was down 2.2%, CSL was the same, Rio fell 3.7%, but otherwise it was a pretty good day. Banks were strong, so too the energy companies and some of the tech stocks, with WiseTech Global up 2.5%. Of course, Michael, yesterday we spoke about how poorly the coal stocks were doing. What did they do yesterday? They bounced sharply.
Of course they did, Sean.
Murphy's Law. New Hope and Whitehaven were both up more than 5% yesterday.
And what's happening on international markets?
There's some interesting stuff going on in global bond markets. Michael?
Interesting stuff in global bond markets. Go on, prove it.
Yeah. Because the Reserve Bank has made it clear it's thinking about pausing rate hikes, and the Federal Reserve in the US is thinking about undertaking more rate hikes, the difference in bond yields or returns you get from bonds between the two countries has diverged. Now, remember, bond yields reflect interest rate expectations. So what that is saying is that the expectations of rate rises are very different in the US and Australia. So you can invest in a 10-year Australian note and get 30 basis points less than if you're doing that to the US equivalent. That's highly unusual. Now, the gap hasn't been that large since March 2020, but of course that was at the beginning of the pandemic. So given both economies are very safe, that you're almost guaranteed, well, you are more or less guaranteed to get your money back, investing in the US is certainly yielding more than here in Australia. That was interesting, isn't it?
It actually was. I don't mean to sound quite as surprised as I do, because my issue is more with the fact that when you set it up as going, there is interesting stuff, you're almost better to say there's important stuff going on in global bond markets, because I'm not going to argue with that at all. But sometimes your definition of what is exciting and interesting is very different to mine. But on this particular occasion, that was interesting.
But you love cryptos, though. You think cryptos are interesting, don't you?
I do. I'm fascinated by it because, again, I don't understand it.
Good. Well, Bitcoin fell to a 3-week low yesterday. Now, that followed the collapse of a bank called Silvergate Capital, or an organisation called Silvergate Capital, which had a bank. That bank was pretty much the most crypto-friendly bank around. It's a San Diego-based organisation. That collapse, alongside the possibility of higher interest rates, hasn't helped cryptocurrencies, and Bitcoin's fallen back under $22,000 a unit. Now, Silvergate basically came out and said it plans to wind down operations and liquidate its banking, blaming the falling crypto market. Not good for that sector. Finally, Michael, the Aussie dollar has clambered its way back above 66 US cents.
Clambered its way back above 66 US cents. It's just such emotive language. You're giving the Aussie dollar such personality, Sean.
Well, you know, as I've said, my first job at the Sydney Morning Herald was to write a daily column about the Australian dollar. And when the Australian dollar goes from 66 US cents to 66.1 US cents, you get very, very adventurous in your adjectives, and all verbs sort of change, and it's
We could have some fun with this. Like, you could just put any word you want in there. The Aussie dollar has lunged or something, just to give it a little bit of spice to it, Sean.
I might try that.
Yes. All right. That's a very weird note to head into our break on. We'll be back in a moment with the rest of the day's business news. Sean, most of the major banks have passed through the hike in the official cash rate on Tuesday to mortgage repayments, but some have also lifted deposit rates.
So National Australia Bank, Westpac and ANZ have all passed through the full amount of the 25 basis point hike to mortgage holders. And I'm sure by the time many listeners hear this, Commonwealth Bank probably has joined the party. That's not really a surprise. What the banks have been criticised for by the government, though, is not doing enough on deposit rates. Now, deposits provide banks with very cheap money to lend out. Given the competition in the lending market, attracting more deposits is a good option for the big lenders. So that way they've got cheap money on hand to lend out. Now there's a bit of competition for that money, and hence deposit rates are rising. A couple of the banks yesterday lifted deposit rates, which we haven't seen this rate cycle. As always with these stories, Michael, the moral of the tale is for customers to shop around.
Yes, indeed. Sean, the federal government is scrapping COVID-19 testing requirements for travellers from China.
Pre-departure screening was introduced in early January following moves by a number of countries amid concern that Beijing was not forthcoming with COVID-19 data about potential new variants. Beijing has changed that, and yesterday Health Minister Mark Butler said testing requirements wouldn't apply to people arriving from China, Hong Kong and Macau from tomorrow.
Sean, you mentioned earlier that we have an interview coming up a little bit later with Lucas Finch, the head of wellbeing at Xero. And the cloud accounting group yesterday said it is cutting up to 800 jobs, joining the throng of tech companies trying to reduce costs.
That's right. New boss Sakina Singh Cassidy took over just 5 weeks ago and she hasn't mucked about. The reduction represents about 15% of Xero's total headcount, and the announcement sent the group's share price up almost 20% at one point yesterday morning before it finished 11% higher at $87. Atlassian earlier this week said it would cut up to 500 jobs, while some of the big tech companies on Wall Street have also announced very large layoffs. Now, Xero said the redundancies were designed to streamline operations and get a better balance between growth and profitability. Xero will also exit its cloud-based small business lending platform, Waddle. Its share price, even after yesterday's big jump, is still down more than 10% over the past year. But Xero is addressing that by cutting costs, just like many of the tech companies around the world at the moment.
Now, one company that I like talking about, Sean, is Myer. And yesterday, its share price jumped nearly 20% after the department store posted its highest net profit in nearly a decade. Is it too soon to say that Myer is back?
I don't think so. I think we can say that. I mean, shareholders were rewarded with a special dividend yesterday. Now, if you put the special dividend alongside the interim dividend and what we expect the final dividend to be, that pace, Myer's trading on a dividend yield of about 10%, which is very, very high. Now, total sales reached a record $1.88 billion for the half year ended January 28. Sales in its stores in CBDs of the big cities jumped 20%. Management have really done a pretty good job turning what was once seen as a legacy retailer into an investable asset, really. Boss John King said Myer's loyalty program and use of data helped the bottom line. It's also allowed Myer to shrink its retail footprint. A big Myer near me has closed down recently, but through digital sales, actually grow turnover. So it's a smarter retailer, perhaps, than what it was.
Now, this one's an interesting one, Sean. Shares in ASX lithium favourites Piedmont Lithium and Atlantic Lithium were put into a trading halt yesterday after a US-based short seller alleged that Atlantic Lithium acquired a mining licence in Ghana by, quote, textbook corruption.
Yes, there's a fair bit in this. Stay with me on it. So the London Stock Exchange listed shares of Atlantic Lithium, it's listed here and on the LSE, fell more than 30% on Wednesday night as investors reacted to short activist Blue Orca's claims that Ghana's parliament may not approve Atlantic's lithium mining licenses because of corruption, according to a report in the Fin Review. Now, Blue Orca, the activist investor, alleges Atlantic's payments to the son of a high-level politician for mining licenses is textbook evidence of corruption. So where does Piedmont fit into this? Blue Orca says Piedmont committed to invest almost $16 million for 9.9% equity stake in Atlantic and up to $87 million in the Ghana project in exchange for offtake rights for the life of the mine. Now, not being able to access that offtake, not being able to access Atlantic's Ghana supply will hit Piedmont hard, the activist investor claims. We haven't heard from Atlantic and Piedmont yet. They will respond to the claims. But recently, we've seen a few examples of activist investors like Blue Orca putting out allegations and seeing share prices tumble as a result. The big case in recent months was Adani, the Indian conglomerate. This fits into that category. Now, we haven't heard, I stress this, from Piedmont or Atlantic, so we'll have to wait and see what they say.
Yeah, it sure is an interesting story, Sean. We'll keep a very close eye on that one. Now, I don't know why this happens, but often when we have a heavy political and economic show, we find ourselves kind of straying into science. And this story certainly fits into that category because a recent scientific breakthrough in Australia could see electricity being generated using nothing but the atmosphere with perhaps just a little bit of added hydrogen.
Yeah, so the process involves an enzyme made by bacteria to help them grow and survive in environments, including volcanic craters and the Antarctica. The enzyme, called HUC, has been found to produce a small electrical current by consuming hydrogen in the air as a source of energy, according to researchers in a paper published in scientific journal Nature. It effectively operates like a natural battery, the scientists from Monash University said yesterday. Producing power from air isn't new. Think of wind to spin turbines or rubbing balloons on clothing to produce static electricity. But the way Huck works is different. That's because unlike all other known enzymes and catalysts, it's a hydrogen gas scavenger, able to use minute concentrations of the gas, according to the study. While it isn't quite clear yet how Huck might be applied as a technology to produce electricity, the scientists say the enzyme could potentially power small devices. Really interesting.
What do you think of the name, though? Huck. Sounds like you got something caught in your throat, doesn't it?
I love it's kind of like your undersea comment earlier in the show. I'm getting quite into the story and it's the importance of it. And you come out like, what do you think of the name Huck?
Well, I mean, I focus on different things.
I loved the name Huck, and not for a moment did I think anything like you thought about it. I did quite like Huck.
All right. Well, you probably don't anymore because I've ruined it for you.
That's right.
International news, Sean. Japan's economy narrowly avoided a recession late last year as consumption slowed and prices rose. It's very hard to go from talking about Huck getting stuck in your throat to talking about Japan's economy, isn't it? It doesn't feel like a natural transition.
When the script was written, there wasn't a transition like that involved in it. It's just been introduced.
Yep. Well, now it's good luck to you dealing with this. You're on your own.
Righto. So Japan is still the world's third largest economy. It's also our second largest export market. It takes about 16% of our goods and services. It's about half of what China does, but almost twice the next in line, which is Korea. Anyway, Japan's economy grew by just 0.1% last quarter on an annualized basis, which was well below estimates. It's one of the few major economies where interest rates aren't rising, even though inflation has picked up. Now, at around 4%, inflation is lower than most other major economies, but it is important that Japan does okay, particularly for our resources. Anyway, it has avoided a recession thus far, but growth of 0.1% over 12 months ain't much.
Sean, finally, the question that we all want to know is where the super rich really live. And it seems that New York is the city of choice, followed somewhat unsurprisingly by London.
Yes, almost 22,000 ultra-high net worth individuals, basically people with $45 million or more, live in New York, which is ahead of London. London's got about 16,000 ultra-rich, according to data firm Ultrata. Ultrata only gives a top 10, and, Michael, there are no Australian cities on that list. Number 3 is Hong Kong, followed by Los Angeles and Miami. Number 6 is San Francisco, then comes Beijing, Singapore, Chicago, and Washington, D.C. Obviously a preponderance of US cities there. But, Michael, if you want really rich neighbours, Monaco is a place to go. 1 in 39 homeowners are super rich. And the highest density of richness in the US. Any thoughts?
I don't know. I'll say somewhere small with a lot of money, like, I don't know, Rhode Island or somewhere.
Yes, not bad. No, Aspen. Of course it's Aspen.
Of course it is, actually. In hindsight, that makes perfect sense. All right. That's a great story to finish on, Sean. It feels like we've finished on a bit of a high there.
I think so.
Now,
after a rocky road throughout the whole show, we got there.
A few unpleasant detours. We did end up in a fairly good place. Up next is the Fear and Greed Daily Interview. Your guest today is Lucas Finch, Head of Wellbeing at Xero.
Yes, all about looking after your people in ways apart from money and titles.
Yes, indeed. And Lucas is speaking next week at the Accounting Business Expo. That is on the 14th and 15th of March in Melbourne, which is a supporter of this podcast. That's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 10th of March, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.